Hey guys, what's going on and welcome back to another video. So if you watched one of my previous videos, you would realize or you would be informed that I'm scrapping my trading plan and I'm completely writing up a new one. So that's what today's video is about. I'm going to be going through my new trading plan, pretty much talking about what I'm deciding to include in the trading plan and why I'm deciding to put those into the trading plan. So let's get stuck into it. I have it right here, everything I've decided to include and why. So I'm going to talk a little bit about this and yeah. So the pairs that I want to trade, the Australian dollar. So if you are subscribed or you have seen a couple of my videos, you would be aware that every single week I make videos about the Aussie dollar, a weekly forecast and a weekly review. And you would know that this is the pair that I like to trade. So it makes sense that this is the pair that I'm focusing on for my trading plan. I'm also going to be putting information about correlated pairs. So this is just about like some pairs which move with or against each other. So I'm going to use gold as an example. So the Australian dollar, it's somewhat influenced by what gold does. So when gold tends to shoot up in price, the Aussie dollar does as well. When gold tends to drop, so does the Aussie dollar. Now this is just because, or it goes into a couple things, but Australia is like one of the places that have, you know, they're huge, they're pretty much major in the gold industry. So when gold does well, it makes sense that Australia does too. So that's why, that's what a correlated pair is. And by understanding what pairs are correlated to the pair that I'm trading, which is the Aussie dollar, I can sort of piece them together like pieces of a puzzle and sort of see, okay, when the Aussie dollar is at a very strong resistance and say a inversely correlated pair is at a very strong support, and they're showing signs of a, you know, their respective bounce, and you can sort of line those two up together and be like, hey, they're both doing the exact opposite things. Since they're correlated, okay, this, you know, adds strength to your case. So I've decided to study the correlated pairs also. So I'm deciding to also include the plan itself. So the way this is going to be written is more of like, it's going to be like a little tutorial, like, hey, this is what you should do, this is what you should be trading and why. So it's going to go into a little bit more depth, but that's just because when things are explained with more detail and the reasons behind things, I learn and understand it better. So the plan itself, am I going to be trading breakouts? Am I going to be a retracement trader? Am I trading from significant level to significant level? Or am I just trading the news? So I know what I'm trading and I've put that in there. I'm not going to give away too much about my trading plan at the moment because I'm just going to talk about the skeleton of it and why I've decided to structure it the way I have. In another video, I'll explain it though. So what patterns or key news am I looking for? So pretty much price moves differently to different news. So it will be important to know what news affects the pair the most and how it moves the pair. Also, I need to know what patterns I'm looking for. So since I am trading price action, it's good to know like, hey, you know, when price is at a resistance and it's making its way back down because it can't break through, what kind of structure does it create? What kind of pattern does it create? What candlestick patterns are there during this? And by understanding when these are present, you sort of understand, okay, this is the opportunity to take this trade because it's setting itself up, you know, and it's showing me that, hey, this is about to happen. So also, what confluences or other cues do I look for in each scenario? So each strategy or each pattern will have its own set of confluences which I look for. Some of them will remain consistent throughout each strategy or pattern, but different ones will require different cues or confluences. So by mapping out each pattern, each structure I'm planning to trade, I can list underneath each one, this is specifically the cues or the confluences which I look for each one. And I feel like that just strengthens the case and makes the trade overall stronger because everything is like individualized. Now I'm also including information in regards to my risk to reward management. So how much am I going to risk per trade? How do I place my take profit and stop loss, and what's my daily loss? So this is just building more strength around or a better understanding of the trading itself. So when I actually am taking the trades, How much money am I risking per trade? How many trades am I going to allow myself each day? What happens if I go on a losing streak? How am I going to manage my risk there? What lot sizes will I be using? Will different strategies require different lot sizes? For example, a strategy which has a higher percentage of actually working out and it has like 10 confluences, just say, will a trade like that be traded with a higher leverage or a higher lot size than a trade that's like, this works like 30% of the time and there's 2 confluences, for example. So this part of my trading plan, the risk to reward management, isn't just, hey, am I risking 1 to 3 or 1 to 2? It goes way deeper than that. So also goes into, scaling in or when to take your losses early before it hits a stop loss, what to look for, market structure, goes deep into all that sort of stuff. So that's going to be a very important section because that's going to be pretty much why this trading plan works. A lot of it will be in this risk to reward management. Also, when is price more active? So if I understand when price is more active, then it just makes sense that that's a nicer time to trade because you can catch the trend while it's actively moving. Just say if it's an uptrend, it's making higher highs, higher lows, you can catch these retracements, or it's much easier to take trades when price is actually moving rather than when it's doing nothing and it's just consolidating or it's stuck in a range and it's not very active, it's very dead. So that's why I want to know when price is most active so I can really see the market moving for what it is. Like I mentioned earlier, like what news does the pair react to the most and how does it move? So fundamentals are a thing and they're definitely important. I don't think that they should be ignored, especially with, I've been looking at the fundamentals recently, putting a little bit more time into it. And yeah, it is super important because they do have the potential to kickstart a certain move, which, you could bag many pips in. They give you like a general direction of, what could happen, or just give you guidance of what the pair, on like what's going to happen with the pair next. For example, big fundamental news about pandemics around the world and stuff and how that affects gold. For example, it's not like it always does the opposite thing. It tends to follow the fundamentals to an extent. Now, also in the trading plan, I will have extra information, which isn't necessarily a plan or isn't necessarily something to follow. So a good example of this would be a solid case study on the patterns and scenarios which I am planning to trade. So for example, my old strategy was trading a break of a trend line within a channel. So that's just one strategy, right? So in my new trading plan, what I will do is under that section, I would have a whole bunch of, I don't know how I'm going to do it at the moment, but pretty much I would have already backtested this many times and I would have many screenshots with many annotations, all based on this one particular strategy where I go into lots of detail and talk about every little thing which they all share in common and common traits and behaviors of this one pattern or this one setup pretty much. So for each strategy that I have or each pattern I'm planning on trading, I'm going to have a big case study already done so that I already understand the movements of each pattern and structure. I'll understand, it's going to be hard to sort of fake me out, or it's going to be hard to throw me off whack by, when price, you think it's supposed to, retrace into a certain area, but it doesn't. It retraces back into the zone that it's, wasn't supposed to, stops everyone out, then makes its way back down or something like that. By doing an entire case study on one particular pattern, because it doesn't happen the same every single time, there's slight differences, and by analyzing like a whole bunch of data, you will eventually get to understand these slight differences, how often they occur, how they tend to play out, like how price tends to play out after making this anomaly or anything like that. So a strong case study on each scenario I'm planning to trade, I feel, is essential. You're just more prepared and on top of your game, and you understand the personality and the behavior of the markets, and it just makes it easier to trade. So it's pretty good to know, the probabilities and the statistics of, areas of retracement or what price tends to do, just all of that stuff. It's all going to go into the case study. So I wrote down here that analyze everything and go deep with the details and record it in a way that is simple to understand, because by understanding the deep details, you in a way get to know the personality of the market. And if you understand how the market behaves, you can take advantage of it. So yeah, that's pretty much what I'm planning on including in my trading plan, and those are the reasons why. I'm going to make another video in the future once I've started backtesting it more, or once it's active. I'll get to show you guys how it actually works. Is this profitable? I guess we'll see, but at the moment I'm still developing it. What I just gave to you is just a very basic skeleton structure of my trading plan. So each topic I just talked about and discussed, it's going to have its own section within the trading plan, where I'm not only going to be talking about the actual plan, like what I should be doing and what to follow. There's also going to be so much background information, statistics, probabilities, research done to back up all these claims and information. So much backtesting going to be done. So I'm really keen to work on it, but for now I'm just going to work on it. You guys are going to have a little insight to what I'm thinking about including. But yeah, so if you haven't made a trading plan, then I highly do suggest that you do, because it helps you trade a lot better, because you're not completely trading off the top of your emotions or anything. You know, if you have a set standard procedure to follow that is backed up by lots of backtesting, analytics, statistics, probability, then that's the best way to go. I, at one stage, was trading without a trading plan, and that's why I was not profitable. Once I started implementing a trading plan, I could see my performance as a trader improving. So my old trading plan was I wouldn't even say it was a trading plan. I'd just say, hey, this is how I trade this one particular setup. And I'd only trade when I saw that setup. But now with this trading plan, there's multiple setups. There's multiple ways to trade it, and I'm really keen to put it to work and talk to you guys about it, show you guys how it's working. If it does work and it's good, then yes, I will put it out for people to see what it is and how to use it, and I will give it away for free. But for me to do that, I need to do lots of work, lots of research, and make sure that it's worth giving out to people. I need to make sure it works first. So yeah, that wraps up the end of this video. Hope you enjoyed it. If you did, leave a thumbs up. If you have not visited my channel before, I highly recommend that you do go through my videos. I am journeying everything from the beginning of my Forex journey to the very end. That's it for today. I'll catch you in the next one.